Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit in Equities. Now, if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. In this video, we talk about 5 stocks from HDFC Securities which they believe will give a boost to your investment portfolio. Now friends, as you all know, there has been a recent massive correction in the markets and a lot of stocks have come to levels where they may be considered attractive. So please go through this list in this video and decide whether investment in these stocks is something that you would be willing to consider. Also friends, please don't treat any of these stocks as recommendations. Please go ahead and do your own research. And if you find this content beneficial, please don't forget to share this video. Please watch this video to know more. Now the first stock on the list is Dishman Carbogen Amicis Limited, which is available at 305.80 and the target price here has been kept at Rs 495. The symbol for this stock is DCAL. Now, Dishman Carbogen Amicis Limited is an India-based contract research and manufacturing services company. The company is engaged in the process of research and development to late-stage clinical and commercial manufacturing. It operates through 2 segments, CRAMS and others. Now, the 1-year chart will reveal that this company generally did nothing throughout the year, and in fact, it is closing the year at a lower level than what it started it. The market cap of the company is 4,935.44 crores, which means that the company is a mid-cap one. The EPS is 9.5301, which translates into a price to earnings ratio of 32.3659, which is a little bit more expensive compared to the industry PE of 28.41. The book value is 295.72, which translates into a price to book ratio of 1.0341, which appears decent. The company did not pay out any dividends and the promoter holding here is good at 61.40. The 52-week high for the company stands at 396.40, whereas the 52-week low for the company stands at 274.95. Now, the reasons put forward by HDFC Securities for choosing this stock are strong visibility on commercial launches and future orders to culminate in sustainable growth starting FY18. With bulk of capex investments already made and prudent spending over the next 2 to 3 years, Dishman Carbogen Amicis Limited could generate $80 to 90 million free cash flows per annum. Now, with higher EBITDA margins and reducing leverage, this company would bring down interest costs and lower effective tax rate will contribute significantly to boost earnings for this company. Now, the second company on the list is HT Media Limited, which is available at Rs 85.95 and the target price here has been kept at 119. The symbol for the stock is HTMEDIA. Now, HT Media Limited is a media company. The company is engaged in printing and publishing of newspapers. The company's segments include printing and publishing, radio broadcast and entertainment, and digital. Now, the 1-year chart would reveal that this company did well during about the middle of the year, but since then has again been falling in the recent market correction. The market cap of the company is 2015.40 crores, which makes it a borderline stock between a mid cap and a small cap. The EPS is 7.27, which translates into a price to earnings ratio of 11.82, which is much cheaper compared to the industry PE of 16.76. The book value is 72.46, whereas the price to book ratio is 1.19, and this again appears cheap. The dividend yield provided by the company is 0.47 and the promoter holding is good at 69.51. The 52-week high for the company is 118.40, whereas the 52-week low for the company is 79.25. Now, HDFC Securities believes that strong ad spend on the back of coming elections and robust growth in radio and digital segment is expected to provide growth momentum for this company. Now, the third company on the list is Mahindra Lifespace Developers Limited, which is available at 435.50 and the target price here has been set at 635. The symbol for the company is MAHLIFE. Now, Mahindra Lifespace Developers Limited is a real estate development company. The company, along with its subsidiary companies, is engaged in the development of residential projects and large format developments such as integrated cities and industrial clusters. The company is engaged in construction of buildings. Its segments include projects, project management, and development activities. It's also involved with operating of commercial complexes. Now, the 1-year chart would reveal that this company was on a very slow uptrend, and generally it seems to be a company with low volatility. The market cap of the company is 2235.34 crores, which means that the company is still a mid cap one. The EPS is 14.5949, which translates into a price to earnings ratio of 30.4904. The industry PE is 39.58, which means that this company is much cheaper compared to the industry standards. The book value for the company is 379.52, which translates into a price to book ratio of 1.1475. Now, this is also not widely expensive. The dividend yield provided by the company is 1.38%, whereas the promoter holding here is average at 51.52. The 52-week high for the company is 563.15, whereas the 52-week low for the company is 336.72. After the recent rights issue of Rs 300 crores, Mahindra Life is well capitalized and has one of the lowest DE ratios of 0.1x, and stock trades at an attractive 1.1 cross FY20 E price to book and close to 14 cross EPS. Now, the next company on the list is Cochin Shipyard Limited, which is available at 516.20, and the target price here has been set at 745. The symbol for this stock is COCHINSHIP. Now, Cochin Shipyard Limited is an India-based company. The company is focused on providing and catering to clients engaged in the defense sector in India and clients engaged in the commercial sector. In addition to shipbuilding and ship repair, the company offers marine engineering training. Now, this stock does not have a 1-year trading history, and the chart that we have provided here is for the time since listing. Now, the market cap of the company is 7017.02 crores, which means that the company is a mid cap one. The EPS is 25.52, which translates into a price to earnings ratio of 20.23, which is cheaper than the industry PE of 24.38. The book value is 151.08, which translates into a price to book ratio of 3.42, which also is not wildly expensive. The dividend yield here is 0 as it's not applicable, and the promoter holding is very strong at 75%. The 52-week high for the company is 599, whereas the 52-week low for the company is 435. Now, with strong order book of close to Rs 8300 crores, it provides revenue visibility for the next 36 to 48 months. Bidding pipeline of close to Rs 10,000 crores, core competency in both shipbuilding and ship repair, debt-free status, best-in-class working capital cycle, reliability in execution places Cochin Shipyard in a sweet spot according to HDFC Securities. Now, the final company on the list is Infosys Limited, and this company is engaged in consulting, technology, outsourcing, and next generation services. Its segments are financial services and insurance, manufacturing and high-tech, energy and utilities, communication and services, retail consumer packaged goods and logistics, and life sciences and healthcare. The common minimum price for this stock is 1163.40, and the target price is 1258. The symbol for this stock is INFY. Now, if you were to look at the 1-year chart, you would see that the stock towards the start of the year actually went on a downward spree and was consolidating for a long time before again it went on an uptrend. Of late, however, with the IT stocks performing very well, this company has also done well. The market cap of the company is 2,54,097.27 crores, which means that the company is a mega cap one. The EPS is 75.82, translating into a price to earnings ratio of 15.34, which is much cheaper compared to the industry PE of 21.58. The book value is 311.16, which translates into a price to book ratio of 3.74. The company is debt free and the debt to equity is 0, and the return on equity here is 0.2521. Now, the company offers a good dividend yield of 2.21%, whereas the promoter holding is 12.98. Now, the 52-week high for the company is 1221.05, whereas the 52-week low for the company is 860. Now, if you were to look at the reasons provided by HDFC Securities, investments made by Infosys in digital transformation, analytics, cloud, cybersecurity, and artificial intelligence would help the company to serve emerging demands of clients in these areas. Infosys grows ahead of its large cap IT peers like Wipro, ACL Tech, etc. in next gen IT services like Internet of Things, blockchain, cybersecurity, etc. and being an early adopter and having higher exposure to BFSI and manufacturing, which will adapt to these fastest. The incoming CEO will bring fresh thrust and direction to the business growth of Infosys, and this is the reason why this has been considered as a future outperformer. Now friends, please don't consider any of these to be stock recommendations of any sort. Please go ahead and do your own research. Also, if you think that this content is beneficial, please don't forget to share this video because it could also benefit other people. Thanks for watching, and we will see you soon with another video.